Mark, what advice does the industry have for households and businesses that might be affected?
Yeah, so if you've been flooded recently or in the last few days, do contact your insurer as soon as possible and get your claim started and going. If needed, insurers are on hand to make emergency payments. So that could be things for immediate needs like clothing or food. It could be sorting out a temporary accommodation if your home is uninhabitable. And then clearly they'll want to get that claims process started as quickly as possible. So that's about sending loss adjusters out to assess the damage. It could be, in some cases, meaning that the surveyor is needed to look at any building or major repair works that are needed, and getting that drying out and decontamination process started as soon as possible so that we can get people back in their homes and businesses again as quickly as possible and get their lives back up and running.
OK, Mark, got to leave it there. Appreciate you joining me today. We have some breaking news to bring you, and I'm afraid it's terribly sad news. Derek Draper, the husband, of course, of the television presenter and journalist Kate Garraway, and, of course, a well-known figure in British politics for the last 25 years, has died. His wife, Kate Garraway, has said in an Instagram post she was by his hand, holding his hand throughout the last long hours. Of course, Derek was a sufferer with COVID for right from the outset, very, very severely affected by that. Awfully sad news. And very personally for me too, because I was at university with Derek more than 30 years ago, and I considered him a great friend. My condolences to the family. Now, the UK new car market enjoyed its best year in 2023 since the pandemic, according to figures published this morning. But the share of the market accounted for by electric vehicles has fallen for the first time. The Society for Motor Manufacturers and Traders said new car registrations reached 1.903 million in 2023. That was up 18% on 2022. Within that, the number of electric vehicles sold reached a record 315,000, also up 18%. But the proportion of the market accounted for by electric vehicles slipped from 16.6% in 2022 to 16.5%. The UK's best-selling cars during the year were the Ford Puma, the Nissan Qashqai and the Vauxhall Corsa. Well, here with me to talk about this is Mike Horsley, SMMT Chief Executive. Mike, welcome to you. Happy New Year to you.
And you.
The overall market, how concerned are you that all the demand seems to have come from fleet rather than private buyers?
Exactly right. It's probably no surprise. I mean, an 18% increase in the market, entirely due to fleet and business buyers. They were the ones perhaps least able to buy vehicles in the past 2 or 3 years because the industry, remember, was really constrained by shortages in supply chain, especially semiconductors. On the other side, from the private consumer, with high interest rates, inflation, pressures on household income, it's probably no surprise. As that eases, it gives us a bit more confidence going into the new year.
Obviously, 2022 was a very, very poor year. I mean, you would have expected some sort of rebound, presumably.
Yeah, it would certainly do, because of those predominantly semiconductor constraints, we just couldn't build the cars we needed to sell. Hence, the wait lists were very long and so forth. They've come right down. So part of that growth, 18% is phenomenal when you look at the economic picture. Part of that is some of that pent-up demand flowing through. But as I said, going into this year is a bit more of a sort of a readjustment back to normality, we think.
So would you expect to see demand from private buyers recovering this year?
Hopefully, with a fair economic wind, and certainly what we're seeing in the last 24 hours or so about interest rates coming down, because obviously the majority of people who purchase a car also tend to purchase on finance. So we've got to make that transition from their old car to the new car as affordable as possible.
Now, on this business with electric vehicles falling as a share of the market, how much of a setback is this?
Whenever you have a shift of technology, it's never linear growth. We go through that early adopter phase, which we have. It's probably where we're at now. We need to make it mainstream. And always remember, electrifying, decarbonising road transport is fundamental to achieve net zero. You will not get to net zero unless we do this. So this needs to happen. But what we need to do is make sure it appeals not just to the fleet and business customers again, but to the entire driving population.
What do you put this down to?
What we saw about 18 months ago is the government cut the incentives for the private consumer. Again, for the business consumer, benefit in kind, company car tax, it's a compelling proposition. For the private consumer, yes, you will be exempt from vehicle excise duty for the next financial year, but that is it. There is no incentive. So what we think we need, because we think that the incentives were pulled too early. Something that stimulates the market, the private market, which is why we're saying look at halving VAT to 10%, like you do on other environmental products.
And of course, presumably, the fact that the government has just pushed back the date for the phasing out of new petrol and diesel vehicles will have had an impact on consumer sentiment too. It's
a bit of a mixed messaging. The pushback from 2030 to 2035 for the industry doesn't change much because those plans are in place. You can't change what are global plans on the basis of one market and 5 years. But for the consumer, it's a bit of a conflicting message. On the one hand, you see the Prime Minister saying we're not going to force people to buy heat pumps, hydrogen boilers, electric cars. On the other hand, we have a regulation that was published 10 days later that compels the industry to sell ever more of these vehicles. That's the mismatch.
Well, quite. It's got to be 22% for each car maker this year. That doesn't look achievable, does it?
We think overall the market's going to be around 22%. When you look at individual brands, it'll be a mixed pattern. They're on different timescale strategies. Everyone's got the same end goal and we'll get there. But for the first few years, there are flexibilities that allow manufacturers to adjust, to bank, to borrow, to probably meet the majority will be able to meet these challenges without paying fines, because the fines are punitive, £15,000 per car. That's not something you want to have to pay. So I think there is sufficient flexibilities, but the challenge is driving the market. No one wants to base the future on a flexibility, on a derogation. It is about increasing demand.
There are several new EV launches this year from the likes of Dacia, from Kia, from Citroën, and they're going to be targeting the low-cost end of the market. Is that going to be a stimulus to demand?
Increasingly so. I mean, the industry is challenged to bring down the cost. These are more expensive vehicles. It's a new technology. The economies of scale are not yet there. And you're, as we'll hear later in the programme, mining rare earths. Increasing model choice, especially in the low end of the market, will take time, but it will get there. And I think the industry's focused on that. How quickly we can get it to a comparable level of purchase price is one part of the equation. The other equation is the total cost of ownership, and an EV is normally cheaper.
All right. Mike, got to leave it there. Great to see you this morning.
Pleasure.
Thank you. Just a reminder of the breaking news which we brought you a few moments ago, which is that Derek Draper, the husband of the TV presenter Kate Garraway, and very much a figure in his own right, big figure in British politics over the last 3 decades, has died. Kate Garraway said this morning in an Instagram post she was by his side, holding his hand throughout the last long hours. Of course, Derek Draper struck with COVID very early on in the pandemic, never really recovered from it, but he leaves a big legacy, not least his 2 children, but a very, very big figure in Labour Party politics for many years. He came from Chorley in Lancashire, was educated at the University of Manchester, and was a political activist very, very early on, was a key figure, really, supporter of Neil Kinnock and his turnaround of the Labour Party following its defeat in the 1987 and 83 general elections, became a very, very well-known political activist right across Westminster. Derek Draper died today. Some other business news stories for you now. The FTSE 100 gold miner Endeavour Mining last night sacked its chief executive for serious misconduct. Sébastien de Montessus was dismissed following investigation into an irregular payment instruction of $5.9 million issued by him in relation to an asset sale by the company. Endeavour said that separately its board had been investigating its former CEO's personal conduct with colleagues after allegations were made against him through the company's confidential whistleblowing channel. Shares of Endeavour have fallen by more than 10% this morning. The pub and bar operator Revolution Bars said today it will close 8 of its least profitable bars following a review of its estate, including sites in Derby, Liverpool, Southampton and Reading. It blamed the closures, which will leave it with 58 bars and 22 pubs, on a continued challenging trading environment and the likely impact of the 10.8% increase in the national living wage in April this year. Well, the news came despite Revolution reporting its best Christmas since before the pandemic. Like-for-like sales, the measure that strips out the impact of new openings during the 4 weeks to New Year's Eve, were up 9% on the same period in 2022. Revolution shares have fallen by 22% on that news this morning. Average house prices in December recorded their first year-on-year increase for 8 months, according to Halifax. The UK's biggest mortgage lender said house prices last month were up 1.7% on December 2022. On a month-on-month basis, they were up 1.1% on November, the third monthly rise in a row. There were big regional variations, though. Northern Ireland saw prices rise by 4.1% year-on-year, but the southeast of England saw prices fall by 4.5% year-on-year. Halifax said it expects house prices this year to fall by between 2 and 4%. Well, last night's sell-off on Wall Street, during which the Nasdaq suffered a fifth consecutive day of losses for its worst run in more than a year, was followed by a mixed session overnight in the Asia-Pacific region. That's the picture there, only the Nikkei and Tokyo finishing ahead. In Europe, stocks are also going into the weekend on a downbeat note and heading for their first weekly loss in 8. Talking points this morning include the French spirits group Rémy Cointreau and Pernod Ricard. They're off 10% and 5% respectively after China launched an anti-dumping investigation on EU branding exports. Meanwhile, here in London, the FTSE 100 also in negative territory, off 0.9%. Endeavour Mining is the leading blue chip faller, while Airtel Africa is off another 2.5%. That remains under a cloud, following the unexpected news earlier this week that its CEO is stepping down. To the upside, well, JD Sports has staged a very, very modest rally. Well, look at that, it's petered out now. Fell 23% yesterday, of course. Outside the FTSE, the shipping services group Clarkson is ahead by just under 7% following a trading update, but TUI is off 4% as investors digest news it's proposing to delist from the London Stock Exchange. On the foreign exchange markets, well, the dollar's hit a three-week high against a basket of currencies ahead of the non-farm payrolls this lunchtime. Sterling off by 1/5% against the greenback. It's ahead, well, it's more or less unchanged against the euro. As for the oil price, well, it's edged higher and is on course for its third weekly gain in 4. Barrel of Brent crude will currently set you back $77.84 a barrel. That's up 1/3 on the session. Joining me this morning is Sophie Lund-Yates, lead equity analyst at Hargreaves Lansdown. Sophie, morning to you. What an extraordinary situation at Endeavour Mining.
Hi, good morning. Yes, this is not the PR storm they would have been wanting. As you were talking about just there, their CEO has been dismissed relating to this irregular payment of close to £6 million relating to an asset disposal. Now, the share price reaction that we've seen, it's into the double digits again, as you said. Now, a large reason for that really is going to stem from broader governance concerns. Their chair hasn't been in the job very long. He's made it a priority. He said it was a priority that they were going to get governance controls in working order. So there's obviously a lot of anxiety around whether or not that's the case. And looking more broadly at the mining sector, it's already under quite a lot of scrutiny, and there's a lot of hope really that the bad eggs, if you like, were all a legacy problem. And actually hearing that these kind of stories are still emerging is really something that the sector in general could do without.
Absolutely. And also, Sébastien de Montessu was instrumental in getting Endeavour to switch its main stock market listing from Toronto to London. So he did have a bit of a personal following here.
Yes, absolutely. That's certainly true. And also kind of along a similar vein, Endeavour has some growth projects, due to be coming online this financial year. It's not an ideal time to be losing your leader. It's a time when operational direction and consistency is quite important. And that's another reason I think we've seen such a high level of nervousness from shareholders this morning.
Absolutely. Now, last night we got a trading update from Walgreens in the US. The share price was really badly smacked after it cut the dividend. But within that, Boots appears to be trading rather well.
Yes, it's a tale of two halves, really, this one. So, yes, Boots obviously owned by Walgreens over in the US. But within that, we have heard that Boots is actually doing relatively well. So they've said that they've had a strong Christmas. That's how they phrased it. But also their underlying sales were up close to 10% in the 3 months to November. That's no mean feat for a company that's had its shares of challenges. Now, there's a few reasons that this is important. For starters, it means that the consumer landscape perhaps isn't as dire as people might have been fearing. But also Boots specifically, it's been really able to capture consumers who are looking to maybe trade down in terms of value. They've got offers there for makeup and skincare across the broad range of prices. But also it's that crucial cross-selling that they can offer. They offer COVID jabs, flu jabs, things like that. They are really good at getting people in the door, and their cross-selling capabilities are really quite positive, and certainly a lot of challenges remaining. It's a large physical retailer at the end of the day. The coast isn't totally clear, but we'll take the good news where we can find it.
Yeah, we have to do that, don't we, Sophie? Good to see you this morning. Happy New Year to you. Thank you.
Happy New Year.
Still to come here on Business Live, could a new coal mine in Wyoming, acquired for just $2 million, actually be worth billions? Stay tuned to find out.
$950 pages of documents were unsealed. So this is not the entire tranche of documents we're going to expect. So there might be more names to come out. But in these 950 documents, there is certainly a lot to talk about. As you mentioned, President Bill Clinton is mentioned in a number of times. So these documents are mostly depositions from the defamation case brought by Virginia Giuffre against Ghislaine Maxwell back in 2015. So in these depositions, we hear many, many mentions of President Bill Clinton, including an acknowledgement by Ghislaine Maxwell that he had a meal on Jeffrey Epstein's plane. One of the things that's very contentious is whether or not Bill Clinton ever went to Jeffrey Epstein's island. He has denied this. He has admitted to meeting Jeffrey Epstein in other places, but he says he never went to the island. So that's something that these documents shed a little bit of light on. And we've got a number of other high-profile people named in here.
Including Prince Andrew.
Including Prince Andrew, of course. So there's a number of references to Prince Andrew. Obviously, we're all following the case when Virginia sued Prince Andrew himself. We know that he's denied these allegations and settled that lawsuit. But there are a number of mentions of him. There's a victim. We did already know this, but we've now seen it in sworn testimony. There's another victim who said that Prince Andrew groped her while in one of Jeffrey Epstein's homes. So that had been previously reported, but to see it in sworn testimony is very, very interesting and will raise questions for Prince Andrew, I'm sure.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Welcome back. Now, it's often assumed that China has cornered the global market in so-called rare earth metals, elements commonly used in mobile phones, computer hard drives and increasingly electric and hybrid vehicles. But the US miner Ramaco Resources has just discovered what is believed to be America's biggest rare earth deposit at a coal mine in Wyoming. The Wall Street Journal has reported that the mine, acquired for just $2 million 12 years ago, could contain resources worth $37 billion. Well, joining me now is Randall Atkins, the founder, chairman and chief executive of Ramaco Resources. Randall, welcome to you.
Delighted to be here.
Which are the elements that you believe are in the mine?
The mine, interestingly, contains a lot of the heavy magnetic and medium magnetic elements, which are, frankly, most valuable, which is why it's attracted the attention of the government, who we've been working with for some time on the overall geologic discovery.
And you discovered this almost by accident, didn't you? It was a government inspector who turned up at the mine.
It's actually the result of about a 10-year exercise to discover alternative uses of coal, which we now frankly call carbon ore instead of coal. So we have been looking to figure how you could use coal as a precursor to make things like graphene and graphite, et cetera. And we were asked to provide samples of the coal to a part of the government's national labs that were assessing rare earths. About a year and a half after we provided the samples, they said, we found something a little startling, we need to talk. And that's how it's led to the discovery of what we think is obviously a very large deposit of rare earths.
How long do you think it's going to take you to start mining these metals?
We've actually initiated the mining sequence already, but it will take us probably a year or so to really determine the overall scope of the geology and the chemistry. And once we've got that underway, we can understand how to separate and extract these rare earths, because they're measured in parts per million, so they're quite minute. And the trick is the separation and extraction.
Yeah, is that quite a costly business? Will that be?
It depends on how it's done. We're in what they call unconventional deposits. So it's coal and carbon and softer, material, as opposed to hard minerals like uranium and mousonite and some of the other things which have radioactivity, which is why a lot of these rare earths are refined in China, because they have to be leached with acid. Ours will be much softer to mine and therefore hopefully less expensive on a number of respects.
Because there is a short seller out there called Wolfpack Research, which claims it's not going to be possible for you to mine these minerals profitably. What's your response to them?
They're inaccurate, and the way that the chemistry is analyzed is different with coal than it is with hard minerals, because you, in essence, analyze coal on what they call a de-ashed basis. In other words, you burn off the organic material and just analyze the actual mineral. Once that's done, and we will be releasing a report next month, which will show a little different result than what has been looked at before.
And do you have the skills base in Wyoming to do this? Because this is, I guess, slightly different from mining coal or carbon ore, as you're calling it.
It is, in a sense, but in a sense it's very similar. So the interesting part about our deposit, part of it would probably be able to be mined conventionally like a coal mine, a surface coal mine. But some of it may be contained quite deep and indeed would be mined in an in situ, almost injection well or fracking type technique. So we've actually brought on board recently some people with specific expertise in that type of extraction. So,
because there are, I mean, obviously, given the strategic importance globally now of rare earths, will you face any obstacle in getting these metals to the market once you've refined them?
I don't believe we will. Obviously, there's a lot more demand than supply, and we are working, as I said, with the government, and I suspect they will be a customer in some respects. But just like your last guest, I suspect there will be car industries participants that will also be interested. Obviously, these are used in EV batteries and things of that nature.
But would you expect these metals to go on sale only in the US? Do you think the US government would countenance the export of these minerals?
So the interesting thing about this mine, it's a large deposit. And of course, we haven't come to the end of the line, so we don't know the full extent. But the initial elements were basically at about 1 million tons. So the US uses about 10,000 tons a year. So that's, a roughly 100-year supply. So I suspect there's a lot to go around. We'll see.
We will indeed. Randall, pleasure talking to you today.
Great pleasure, Ian. Thank you.
Well, that's it from me for the time being. I will, of course, be back with our afternoon edition at 4:30 this afternoon with that all-important US employment data, the non-farm payrolls. And don't forget, Sky News has just launched its new daily money blog online and on the Sky News app. Scan the QR code on screen to see news on tax changes in 2024. You can work out how your take-home pay will change from tomorrow using our national insurance calculator. Thanks for joining me this morning. Up next, it's Samantha Washington. As I say, I'll be back at 4:30. Hope to see you then. Cheerio.